And welcome back to my channel RJTrades. If you have not liked or subscribed, please don't forget to like and subscribe. And if you have any questions, always comment below. Also, don't forget to follow me in other social media. I make a lot of educational video in TikTok as well as post my charts regularly in Twitter. So all the links is below. And also, if you want to sign up for Webull or Robinhood or any other broker, I have a link below. So use that sign up link so that we both get credit. But let's get started. So today's topic, a lot of people are still confused what options, like what strike I should choose, what's the time, what time frame I should choose. Some people are choosing really high strike. So I'm gonna kind of go over, like, the thing is, like, there's not one answer, one size fit all. It depends what you are doing. Are you day trading? Are you swinging? How long you wanna hold it, right? So we're gonna kind of go over those things and probably kind of go over what's the pros and cons of each. So let's get it started. So trading, right? Mainly there are three styles of trading. One is basically somebody scalping, which is basically he getting in and getting out like within a seconds, like not even a minute, like getting in, getting out. It could be a minute, but just really scalping means like you buy and you sell, just get out like seconds. For those, like if you are doing it options and if you think it's a great setup, like it can just from like some seconds to few minutes, I would suggest like spread is not the way to go. There's, you gotta be quick, you are quickly getting in, quickly getting out, right? So with the spreads, like you need to fill the, just to get fill, like it has to match the both the price, so it's harder. So the best way is always look into like something, you know, just for example, let's look at the example for Apple. So this is a long Apple call, so just kind of selected. And if you are scalping, like I usually try to go at the money or in the money. So at the money basically means like right around the price. So Apple is at what's the price of Apple right now? 116. So yeah, right in the money will be like 116 or 117. So that's fine. You could just do that, right? You got in at 160. If it's like 170, 180, you sell it, right? So that's $20 for one contract. But if you have 10 contract, that's 200. And kind of size matters here, right? Size may not matter everywhere, but here matters. So as you increase your size, you can actually make good money. So that's don't do spreads if you are just doing scalping, right? Don't do spreads. And yeah, I just select the strike price. One thing always you need to be careful is always look at the volume. For Apples, you have a lot of volume, like 170 is 125. That's a good volume. Like even anything's with like couple thousand will be pretty good. So always look at that volumes. And also look into where's the bid ask. Okay, it's right here. Also look into the bid ask. So here you can see that, right? Mid is 61, bid is 60, and ask is 63. So bid ask, always like make sure your bid ask is as smaller as possible. So this is pretty good. 60, 63, that's pretty good. Usually like it's better to have less. So if you see, look at the Tesla or some expensive stocks, it will be really wide, like maybe it's 50, it's 70. So you're basically losing $20 while buying and losing $20 while selling. So that's not good. So make sure your bid ask is as close as possible. Other than that, look into the volume and open interest. And if it's a decent volume and open interest, by decent it depends upon the stock, but I would say anything's above couple thousand is pretty decent. Like look into something which has at least a few thousand volume, and at least 500 to 1000 open interest. That's always a good. So that's for scalping. For day trading too, so if you are day trading, what is day trading? Day trading is basically you are buying and selling in the same day. For those, I would like, if you are day trading, it doesn't matter when you choose the expiry. I will again try to get right around the in the money. So a little bit in the money. 115 is great too, but it will cost you a little bit money, like, but if you get 117.5, that's fine too. But your plan is to get out of the day, right? That's a day trade, right? So you are not holding it, so you don't need to worry about theta. But one thing is theta does impact. If it drop down a little bit down, then goes up. So if the price, let's say it's at 116, and if it goes 115, then it goes 116 again, your value won't be 60, it will probably like 55, right? 50 or 55, it's not exactly, but it will lose value. That's why if you get in the money, if you get in the money, for example, if you get 110 call, which is pretty decent, like for, so if you got 110 call, which cost you 675, if it goes down and goes up, you won't lose that much as opposed to getting this one. So depending, but 110 is expensive, so depending like what's your budget. So I don't go that deep if I'm day trading, but I try to get it like if it's 117, maybe 115. That's pretty good volume and everything, so easy to sell. But 117 is not bad too. So 115 is a little expensive, but you can just get like three of those, right? If you have 200. So usually I get in the money right around there. So if you are really bullish, right, that's why you are buying. But always have your stop loss. Like if it doesn't work, your thesis is maybe it's breaking out of ascending triangle. If it's a fake out and goes down or goes down, just sell it. I mean, you have to have a discipline, otherwise you can't win this game. So uh, um, that's for day trading too. So pretty much. So look at the volume, look at the open interest, and look at the bid ask. Try to make sure like it's not wide. um, Pretty much that's about it. Now comes the swing, right? So you are looking at the daily level or some things, and you think it's a right at the resistance or right at the support, and it kind of support held and it's kind of going up, and your thesis is, let's say it's gonna go up, right? Then what do you do now? For spreads, I would suggest at least get 3 weeks out, 2 to 3, minimum 2 weeks out, right? I would suggest like 3 weeks usually. Get three. Again, it's all depends, right? One thing is like for spreads, to get your max profit, you have to wait till expiration. So if you're really bullish this week, I mean, you can get a week. But the thing is like if it doesn't work your way, if there are chop, you may lose quickly too. So what I usually do, for example, right? So what I'll usually do is, let's say Apple is a right at support. Again, I'm not suggesting somebody to buy Apple. This is just for demo purpose, but just an idea, right? So for example, let's say Apple is really at I'm gonna clear this out just cause I'm gonna show. So uh, this is week 1 2, so we'll take October 23. So I think I'm really bullish about Apple, right? So I'm really bullish about Apples, and I think it can pop up. So what I will do first things, as I said, is I'm gonna look into the volume, right? You can see that volume 115, that's pretty decent. 120, that's pretty good too, and 125 is good too. So I'm getting a spread. So one thing is, don't get crazy numbers. What a lot of people do is, Apple is 116, they're getting like, maybe 150, 160. I mean, it can happen, it can go, but extremely unlikely to go there, right? So that's a 2 delta. That's like 0 point, almost like beside this is 2 delta. So they're literally like 0.001% of going into more than 143. So if you're, it's cheap, but it's cheap for a reason. So I will try to just stick with something, right around like 1 delta, where you have almost like 60 70%, 60 70% of the time it just moves around this area. Basically it's like 70% of the time it will be, by this time it will be around 1.4 and 129, right? So what I do, I'm gonna look into the volume, and I so here volume looks 120. So what I'm gonna do is long call options. I'm gonna choose call vertical, and I'll select go. Then you can just adjust it, right? So you can look into it. So I'm gonna select 120, 120, and 125, right? Again, a lot of people will ask me like how long width would be, right? 120, 130, depends, right? So if you think Apple gonna go 125, then you can get two 120, 125. You can get two of this spread, right? if you get if you get 130, maybe cost will be same, but your cap is like you're maxed at 25, right? So you are thinking, unless, but if you think it's gonna go way past 130, it doesn't matter. So it depends like what you really want. So that's, but I usually keep $5 with pretty close, so that way it can be in the money. And so the cost is 175, right? The cost is 175 for spread. And if you look at this 157, 190, 170, pretty decent. Like for a spread, for spreads you will have a little bit of wider bid ask, so that's kind of given. but this is pretty good. You don't want way crazy here. It's about 60 70 into 30, so 30 cents, which is pretty decent. So if you get filled at 75, you will never get like perfect fill in Apple and everything. And if it's few weeks out, that's something you have to. But once you get this spread, you can look at some numbers, right? So what's the probability of profit? 34%. But probability of probability of reaching halfway, like by halftime, is 55. So that's pretty decent. Your delta for each dollar up, you will make $15, but this will increase as you move, right? This delta is not a constant. Look at theta, it's not bad. 190 each day, you will only lose $2, so this is pretty decent. And your max profit is 325, loss is 175, whatever you pay. But what I would do is, so so let's say first week it's just going to, let's say, 117, maybe 118 or 119, right? That's great. I mean, you should be profitable. If that happens within the first week, you can always get out. And let's say by the second week, let's say by second week, you are at 122, 23, you can get out, you can sell at any time. I usually sell out before a week, unless like I'm like within the second week it's 130 and there is no sign of going down, then I may hold it. But I I remember very few of the trades I literally waited till expiration. Most of the trade I always sell before expirations. I think one of the Python, but most of the I already close before the expiration. So by the week out, because for example, let's say if it doesn't even work out, right? Like maybe it's like 115, 114, right? If you sell out within a, let's say you have a 1 week left, you can maybe make like 70 $80, so you did not lose all. You lost 50%, but you still kept that good amount, right? So depending upon, but I usually try to cut it out. If it doesn't work or there's some bad signs, I will usually cut it out at 20-25%, because it's really hard for a spread to get at like 10-15%. But that's how I do it, and I think that's how you should be doing. A lot of people I see, they are just doing weekly. Again, weekly is, if you're really strong, that's fine weekly. But weekly, if it does not work, your theta will be really high. I guess we can actually kind of see, right? Let's reduce the time. Right, so 120, 125, right? You can see that here delta is 682, but theta is for each day. So uh, yeah, so it's $8, I guess. Yeah, it's $8 tomorrow. So let's say if it's expired tomorrow, it's $8. But uh, you lose $6 just holding it overnight, right? You'll just lose $6, and for each dollar up, you will make $6. So at least it has to go $2 up by tomorrow. But the thing is, like, even if it goes $2 tomorrow, it will probably harder. You'll be probably you know not even break even, cause theta will increase. And yeah, again, these are just a rough estimate, these are not exact numbers, so it changes a little bit. And other thing you can actually do is you can always analyze. So let's move it to next week. So we have 21, so you can always go back here and you have this. And what you can do is 8 day 1 day. Oh, I already have this, so I'm gonna remove that. And you can actually simulate, right? So theoretical price, that's today. So if you, so your profit like 7, just make things it's 0. But if it goes $1, you 28, $2, 51, $3, 74, $4. So you can always simulate like what day. So tomorrow, day after tomorrow, 6 on 6, if the price is, you'll make this. So you can always simulate and see how much you will make it. And a lot of people are saying like, hey, I'm both legs are in the money, why I'm not profitable? The thing is, like, it can always come back by the expiration, right? So to make a mixed profit, it has to be expiration, right? And other thing is like, hey, price went up, but I'm still so basically some people are saying like they bought in at like 111, right now 115, the but the price is same. One thing it could happen is, even if it's going up, so maybe like time is your theta might be really high and there's 15, right? There's still $5 to come, and if you are like on Thursday and Friday, there's no way it will get to 120, right? So it could be one thing. But if it's just yesterday and today and you have a lot of times, maybe you really got a bad fill, right? Bad fill basically means like here 99, 10, 102, 106. So you could literally get filled at 106 or something, right? If that happens, or sometimes even more. If you got a bad fill, you got filled at bad price, then it needs to move higher, right? So yeah, pretty much that's about it. If you have any more question or comment, please comment below. But that's it for today. Thank you.